Hello aspirants, this is Varun Kumar. Today we are going to learn about ESI part 1, which is measurements of growth. In the measurements of growth, what are the topics we are going to cover? Today I will tell. The first topic is going to cover is GDP, and the second is NDP, which is net domestic product. Third is GNP, gross national product. Fourth is net national product, and fifth is cost and price of national income, and gross value added versus GDP, and fixed chain based method. These are the topic for today. It's a part 1 video. Okay, I will say what are the uses and I will say example. Okay, now let's start about gross domestic product. As I am reading in English and I will explain it later. The gross domestic product is a total value of final goods and services produced within country by the residents produced during a given period. So here GDP is nothing but a total monetary policy, total monetary of a country. Okay, for example, if India produces 100 rupees in 1 year, so its GDP is 100 rupees. Okay, this is known as GDP. And what is NDP? NDP is nothing but net domestic product. NDP means if GDP is 100 rupees, we should minus depreciation. There will be depreciation. Like for example, here is an example. NDP represent the remaining value for consumption or saving after maintaining the existence capital stock. For example, if GDP is 100 lakh crore and depreciation 10 lakh crore, the NDP will be 90 lakh crore, as I'm explained in the earlier. Okay, this is NDP. Next, move on to the gross national product. This video will be quick and fast, so please adjust. Okay, next is gross national product. Gross national products measures the total value of final good produced by resident, and regardless whether the production take place. See, gross national product, I will explain with an example. What is gross national product? Now we understand GDP, right? GDP is a total number of financial consumption, finance which has been produced within 1 year in a specific year by a specific body, which is known as GDP. GNP means plus abroad income. GDP plus abroad income. For example, if is any Indian working in abroad and sending money to the India, even that count as abroad income. So GDP plus abroad income known as GNP. Okay, the next is net national product. NNP is GNP minus depreciation. Like net national product minus depreciation is in GDP. GNP minus net NNP is depreciation. So if represents the nation's net output available for the consumption and saving. Equivalently, NNP is equal to NDP plus NFIA. For example, if GNP is 100 lakh crore, okay, and depreciation 10 lakh crore, and the NNP will be 90 lakh crore. So even here 90 NNP divided by total number of population, we get per capita income. How per capita income is calculated is NNP divided by total number of population is known as real per capita income. These are the examples how this is, so ignore this. Next, let us understand the cost price of national income. National income aggregates can measure at the factor cost and market cost. Factor cost excludes net tax, indirect tax minus subsidy, and reflects payments to factor of production. Market price also called as purchase price. So with example I will explain. What is factor cost? Includes production cost and subsidies, exclude tax. In factor cost there is no taxes. Okay, for cost production plus subsidy minus tax. In market price, factor cost plus net indirect taxes minus subsidies, which is vice versa. Okay, for example, if GDP at factor cost is 900 and the net indirect tax is equal to 100, then GDP at market price is 1000. Okay, India practice until 2015 national India's accounts quoted GDP at factor cost. Since 2011 and base revision, we will take as 2011 and 12 as base year. India reports GDP at market prices in a SNA standard. Okay, In addition, national incomes can be stated at current prices or constant prices. Most of the thing has been measured in constant prices. Constant prices is 2011-12. Current prices current years. Okay. Next is gross value added. Gross value added is measures output less intermediate consumption for each sector of economy as whole. Equivalently, GVA is sum of value added by the industries. I will explain you with an example. Okay. Where is example? Here is an example. Here is an example. This is example. You can read it. I will provide this PDF in the description or the comment box. Please go and check it. And I have a Telegram channel. Please go and check. Now let's come to the topic. GVA is often preferred for supply side analysis. It shows the contribution of each sector. Why GVA is important? Because GDP shows the overall growth of a country. GDP shows overall growth, while GVA shows the sector wise growth. For example, in India, IT sector is very booming, right? In Bangalore, IT sector is very booming. In Gujarat, cloth manufacturing industry. So in Chennai, automobile industry. So like GVA is used for this. Okay. For instance, okay. Now let's come to the fixed base and chain base. Okay. Fixed base, constant base index. A fixed base index uses a single year as a base year. For example, even today we use 2011 and 12 as a base year, which is known as fixed chain base. Okay. Chain base is nothing but we will take previous year. For example, we will take previous year 2024 as base year comparing to 2025. For example, in 2014 the milk price is 100 rupees. For example, milk price is 100 rupees. In 2025, what will be the milk price? If it's increased by 5 rupees, so the milk price has been increased by 5%. So this is known as chain base. Fixed base means we will compare it with fixed year, like 2011 and 12 is a fixed. Okay. For example, suppose electronics output grows rapidly relative or to older sector, a fixed base would understate recent growth since it weights the electronic sector by its smaller base year. So, if electronic grows in current year, it might be higher percentage, but in the fixed it will be lower percentage. Okay. So these are the key takeaways. GDP's umbrella, aggregate total, NDP, NNP are this. These are the measures of the development. We should be clear in this. I hope you are clear in this. So now, thank you for this. I will meet you in the next video.